Welcome back, guys, to the first video of the installment, and today we're going to be going over some basic stuff. We're just going to be covering buy side and sell side liquidity. So what is buy side and sell side liquidity? It's the existence of buy and sell stops from pending orders that are set in the market by market participants. So for example, here we can clearly see that we have sell side liquidity resting beneath old lows, which will always rest beneath old lows. And we have buy side liquidity here resting above old highs. And within everything, we have a range, right? Within the range, which we call our dealing range, we have a measure of premium and discount within the range. So if we were to take a look on our Fibonacci tool, right? We can see that marking out the 0.5 level, we have a premium and a discount, right? So everything above this part of the range would be considered a premium market, and everything beneath this part of the range would be considered a discount market. And the idea is to sell in a premium market and to buy at a discount market for price to revisit the opposite end of the range. Now, back to the initial video topic, buy side and sell side liquidity. Where can we find it? Well, we will always find buy side and sell side liquidity beneath and above old highs and old lows. For example, here we have buy side liquidity. Here we have buy side liquidity, or sell side liquidity, excuse me. Right, with this example here, after we've swept buy side liquidity, we can expect price to revisit sell side liquidity at the opposite end of the range. With this example as well, right? After we've swept buy side liquidity here, right? After we've swept buy side liquidity here, we can expect price to revisit the opposite end of the range, which is sell side liquidity here. So this is extremely useful when looking at certain ranges, like one, for example, time-based liquidity, right? For example, if we've taken the lunch highs, if we swept liquidity from the lunch highs, we can expect price to subsequently visit lunchtime lows, right? Let me take a look back. If we have taken liquidity from lunch, once again, if we've taken liquidity from lunchtime, or in this case, AM highs, if we swap liquidity here, we can expect price to revisit AM lows, which it actually does, but here, in this case, we have a S&T, which we'll cover in a later video. But the basic principle is that after we sweep one side of the range, we will revisit the other side of the range. And we can use this to identify the draw on liquidity very often, right? That being said, buy side and sell side liquidity is the existence of sell stops and buy stops resting beneath old highs and old lows. Now, some useful plugins to identify it for beginners would be Liquidity Swings by Lux Algo, which reveals to you buy side liquidity and sell side liquidity. I hope you guys enjoyed this brief video, and I'll see you in the next one.